Yesterday we did what's it called introduction to one or two things like the forex or trading, anyone you call it. So based on what is it called? Based on our table of content, we talked about introduction to trading. That was yesterday. So today we'll be talking about candlesticks. Candlesticks. So hope you guys can hear me.
Yes, sir, but it's
Who
not that
is drawing
audible.
something? Is that person should stop drawing stuff? Thank you. How about now? Can you guys hear me now? Am I audible enough?
Yes.
Yes, yes.
All right, all right, all right. So we're talking about candlesticks. What next on the last on the slide is unlock the secrets to market psychology and price action. Please, I want to believe you guys have your notes, either your notepad or any writing materials to write one or two things is extremely important. So at least after the two, go back to it and study. So please make sure you take notations. All right. So unlock the secrets of market psychology and price action to make informed trading decisions. It simply means that one of the key to market psychology is understanding your candlestick and candlestick patterns. So understanding candlestick fundamentals. Now, this English, just forget the English. It's more like saying we will be breaking down one of the most powerful tool in technical analysis. So we'll be looking at number one, what the candlesticks show or what it represents. Then we talk about the key parts of the candlesticks, that is identify and understand the components, that is the body, the wick, and the color. Then market psychology. Basically speaking, you're talking about candlestick anatomy. Do you understand? So let me see. What are candlesticks? Let me read this thing. Read this, okay? Done. What are candlesticks? Candlesticks are basically okay. Let me just go straight to the charts. Sort of just giving you guys theory, you know, skip. All right. So basically speaking, all this year, um, I think this thing is okay. I'm trying to move the screen, but you can see these red and blue things. These things they are called candlesticks, and I want to believe you guys are familiar with it because how will I say it? I sent some materials to a few persons that chatted me up. So I believe you guys should have studied ahead of the class. So those blue things are candlesticks, just like you can see here. You can see here. So candlesticks are visual language representing the constant battle between buyers and sellers. That is the when you hear the bulls, that is buy. When you hear the bears, that is what to sell or sellers. By now you should be familiar with all these linguas because it's among the PDFs I sent to the beginners that messaged me. So each candlestick encapsulates the price action for a specific time frame, whether it's 1 minute, 1 hour, a day. It immediately reveals who had the upper hand during that period. Please, one thing or the scenario as regards this no trading whatsoever is just like a tug of war. You should know tug of war. This game we play when we are very much younger. That will draw line, then we'll have groups, two groups with rope. They will not be dragging to see which side is going to win and things like that. That is called tug of war. So we view the market as tug of war between the buyers and the sellers. Now, They are direct representation of supply and demand. Simply means to sell and to what? Buy. As simple as it is. So now we're going into anatomy of a candlestick. What do we mean by anatomy of a candlestick? Anatomy of a candlestick simply means the properties or the structures of candlestick. What's actually makes up a candlestick? This is just a 3D representation of what a candlestick looks like. Now we have the body. What is the body? This is the body. This here, this whole part is the body. It indicates strength of buying or selling. The green one here, you see the arrow, immediately indicates going up, means to buy. Yeah, I guess you are all familiar with this. This also indicates selling pressure. Do you understand? It indicates selling pressure. Very, very pretty simple beginner stuff. So this here is called the wick. This here is called the wick. This is the wick. You can call it wick or shadow. Wick or shadow. This here is called the wick or the what? Or the shadow. Do you understand? Now, so that is the wick or the shadow. That is what we explained not quite long. It reveals rejection or testing of price level. Please pay attention. Marking the highest and the lowest price reached. Now, this is the wick here. It simply means, let me see if, okay, let me just continue. The price opened. This is, let me take this green candle first. This one here, this part. That's example. So it simply means the price opens here. Please jot it down if you don't know it. Every bullish candle will always open at the base or the bottom. Please write it down if you are a 2000 B or if you don't know it. Every bullish candle always starts at what? The base. Where is the base? This is the base of the bullish candle. The down, this part here of the base, the base of the body. Do you understand? Then this low indicates or it connotes that price at a particular time moves down. It means when buyers came, when the market opened, we always open with a dash. The market is always open with a dash. Then, or consolidation, anyone you want to call it. Then sellers, based on this structure, this candlestick anatomy, what this candlestick is telling us, or what it simply means is that at a particular point in time, sellers came into the market and pushed price to this point. This point here.
People that's what,
you said? Who's that? Please, if you don't have anything to say, kindly mute the mic. And if you have question, jot it down for the second section. The second section is basically for the question. So just jot or note your question. I don't want any interference because this is Zoom and we're having very limited time. So please don't unmute your mic to avoid any form of distraction. So at a particular point in time, the sellers came to this market, immediately the market opened to push the price down. So this place the note or connotes the lowest point at which market drove or market participants or the sellers drove the price to. Then buyers came into this market and pushed it up. Please mute your mic. And pushed. Okay, I think I'll have to mute everybody by myself. So if you have any question, you would mute yourself, please. Everybody should mute yourself. Okay, who is not muted here? Okay, I think everybody has been muted. All right. All right. So at this point in time, who is that person now? Okay, Mary for sure. What is that? Fashola. Oh, Jesus. All right. So price opened here. Please, I don't want any distraction. That's why. So price opened here. Then sellers came to push the price down to this point. Then buyers came again because you have time. Then buyers came to push the price way up to this high. To this what? High. This is the highest level that the price was traded to at this particular time. If you remember, we said this candlestick actually represents time frames also when we're talking about the 1 minute, it could be 1 minute, 2 minutes, 3 minutes, depending on the kind of time frame you're actually viewing. So let's assume this is a 1H or H1 candlestick, that is 1 hour candlestick. So it means within the 60-minute time frame, the buyers were able to push the price away from this low up to this high. Then since it's a tug of war, sellers were also given fair chance to participate. Then they were able to push the price to this place. Then the 1 minute, or sorry, the 1 hour time elapsed. Then they closed here. That's simple as it is, nothing much, nothing complicated. Here also, the sellers, the sell candle or the bearish candle will always open at the top. Please note that down. The bearish candle or the sell candle or the supply candle, anyone you call it, will always open at the top. So when this, based on this candlestick anatomy, the psychology behind this candlestick anatomy says that the market opened as consolidation or dash. Then immediately buyers came to push the price here. Do you understand? Buyers came to push the price here to this point. However, sellers came to dominate this market by pushing the price, by applying much selling pressure, and they were able to push the price down to this lowest point on this time frame. This is 1 hour time frame. Then buyers came also to push the price up to this time. Then when the 60 minutes elapsed, it closes. So that's why we see what this kind of candlestick. Do you understand? So you should, by this with this simple analogy, you should be able to tell. Do you understand? You should be able to tell that okay, this is what actually happened in this market. Okay, I think based on the fact that this place is where the candle opened. When the candle opened, the buyers and sellers came to the market to push the price down to this point. Then from there, the buyers came, pushed the price up to this place. Then sellers pushed it down. Then the time closed everyone here. So I think that is not bad. It's very, very simple and pretty straightforward. Very simple. So the colors now. The colors, this is where most newbie make mistakes about the color. Just because you see green does not simply means we are having a bullish sentiment. I'll explain. Not now. I just hope we'll be given time to move to the chart because I wish to explain some things there in the chart. So this one. So decoding market dominance. Now, the length and the color of the candlestick's body tells a direct story about who is in control during that trading period. But now, just because we're talking about what is it called, basic, just pretty basic. Today, if there is time, we'll move into the more complex one. But it's not really complex. It's just understanding the psychology behind each of these candlesticks. As simple as this. So this actually denotes, this candle here actually denotes bullish presence or bullish dominance. You can see green, 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 green. Then here, red, 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 red. This is what we call the bear market. The bear market or the bearish market, anyone you call it. This is the bulls. When you hear bullish, it simply means to buy or to go up or to move higher, or there is an inflow of demand. Do you understand? Any English you want to call it, they are all the same thing. It simply means something is going up. This one simply means what's coming down. As simple as that. Too much complicated stuff. So we've explained this. Now, wicks. We have the wicks. The wicks tell the story of price rejection. It simply means that the wick will tell you where price rejected from. It means at a particular point in time, based on this candlestick here, this is a red candle. Now, please jot this down. A red candle, simply, how will I say it? Okay, when I get there, don't let me to jump. So here simply means that at a particular point in time, buyers came to push price from here up to this point here. However, sellers came to push the price down to this point here. To this point, this is the close of every red candle. I'll give assignments in the second section, so please make sure you come back for the second section and do the assignment. And today I'll be opening the group. Usually did this. Not every group, anyways, but some groups. I'll be opening some groups for discussion or submission of assignments, and at least you get to know each other. Make sure you join those subgroups. Make sure you join the subgroups in the community. I'll still think about the, what is it called, opening out. I'm still considering opening the Telegram group, but for now, I'm still waiting for more convention to do that. Let's see how we would handle the WhatsApp group for now. So at this particular time frame, it simply means at this point in time, markets open. This is a red candle. Simply means it opens at the top. Don't forget. So the markets opened here. Then buyers came to push the price to this point. However, sellers came to push down the price to this particular point before the time elapsed. So that's how we form this inverted candle, inverted armor, anyone you call it. So let's proceed. Yeah, that is the same thing I pretty much explained. The same here too. The same thing here. Simply means that at a particular point in time, the market's opened down here. This is a green candle. So it's always open at the bottom of the body. If you have a question, jot it down. Hope you guys can hear me. Please signify if you can hear me. So please signify. The candle opened around here. Then sellers, nobody has signified yet. I don't know. Can anybody hear me?
Yes, we can hear you, sir.
Thank you. All right. So the price or the candle opened around here. Then sellers immediately followed by pushing the price down to this low. However, buyers are extremely interested in this price action. That's why we have massive influx of buyers, and they push the price up to this point, and then the time elapses and closed. That's why we can see this hammer candlestick. So anytime you see this candlestick, it simply means, okay, don't be too fast. By now, I think most of us should have been able to denote that, okay, since this one has more selling pressure, it means sellers on this market. Since this one has more buying pressure because we push to this side, it simply means buyers on this market. Yeah. This is what we know as doji or indecision candlesticks. Candlestick. This is an indecision candlestick. These two are called rejection candle, indecision candles. Indecision simply means, how will I say it? The buyers are and the sellers are not even ready to take a particular decision. We don't really know who is interested or who might be interested in the current price. Perhaps they are not even interested yet, so we don't know. It's that how we call it an indecision candle. So anytime you see this candle, as a beginner, it simply means not to trade. As a beginner, it simply means what? Not to trade. But as we advance, you understand the power of this indecision candle. It's extremely powerful. As we advance, don't worry. So, what is the psychology behind this? What is the anatomy? It simply means this is a green candle. So the first thing you have to ask yourself is, where is the open of this candle? The open of every green candle is always what? At the bottom. Don't forget, this is the open there at the bottom. Then it means, and when the price opened here, sellers immediately came into the market and pushed the price down to this place. However, the buyers are also interested in this market, and then they push the price all the way up to this point here. They push the price all the way up to this point. However, the sellers also were dragging. Then they push the price down to this point. However, on getting to this area, the time elapsed. The time did what it elapsed, and then that's why we formed this edition. So based on our parameters of judgment, we don't know who is actually, what is it called? Who is actually dominating this market? That's why we call it indecision candle. We cannot take a buy decision here, neither can we take a selling decision there. Do you understand? Unlike these two, this is a rejection candle that implies sellers are so much interested in this candle or sell in this candle or in this price. Let me use the word price. Please, the person drawing there should cancel that thing just now. Whoever drew that thing should cancel this thing. I don't know. I used to forget to stop people from drawing this thing. Please, if you are the one, check your phone very well. Joseph, can you hear me? Please, when next you'll be having this class, before we have this class, just remind me that I should do some admin settings. Do you understand? So that you just be taking care of all these people that are disturbing the class.
Okay, sir.
And we'll make sure we'll not enable anybody to draw anything on the screen. The person might not know that it's he or she that did it. So just to make the class more organized. Thank you very much. So we have key candlestick patterns. This individual candlestick often signal potential reversals. Please, these names, make sure you jot them down. We will not be needing all these things because I don't use them. The major thing is to understand the psychology behind all these candlesticks. Do you understand? Understand the psychology behind this candlestick. Doji candlestick is just like, what is it called? The previous candlestick here, this indecision candle here, this indecision candle. Just like this indecision candle you can see here. So it does not really show a particular bias. It does not show a particular bias. So we have the doji stick candle or doji candlestick. We have the hammer or inverted hammer. We have the engulfing candles. We would hopefully in the next section we would quickly talk about them. So doji stick candle simply signifies indecision or tug of war. Do you understand? It signifies indecision or tug of war. Opens and closes at just the same thing I explained there. Then inverted hammer is the same thing that is there. Engulfing candle simply means we have extreme either buying pressure or selling pressure depending on the candlesticks that appear. If it is a bullish engulfing candle or a bearish engulfing candle. Let's see. Understanding multi-candle formation. That is, we have 2 candle formations, 3 candle formations, 4 candle formations, and the likes like that. We have the morning star, we have the evening star, we have the inside. But please, you guys should not be like, how am I going to, what is it called? How am I going to memorize all these things? I never even sabi this in the column. That you have not even understand the first 20 elements. I see the color thing. That you want to pack all these things on here. Don't worry, you don't need to memorize the names. The major thing is to understand the psychology behind it, and that's what I'm going to be giving you guys. The psychology behind every of these candlesticks, whether you have single stick candle formation, multiple dual candlestick formation, triple candlestick formation, whatsoever, quadruple, name them. Just the major thing is to understand the psychology behind all this formation, and that's what we are going to be looking into. So we have the power of candlestick analysis. Mastering candlestick provides a significant edge in understanding market dynamics and making informed trading decision. This is what distinguishes us from a gambler or an edger. This is what distinguishes us from what a gambler. When you are not seeing your edge in the market, it simply means you are not permitted to trade at that particular point of time or point in time. As you advance, you understand what I'm talking about. But however, just keep on following and be jotting all these things I'm saying them because it will be your guide later on. So, the first thing you should know that it reviews emotion. They graphically display a raw greed, fear, and hesitation of market participants in real time, helping you to read the word collective sentiment. Helping you to read the collective sentiment. By the time you see a consolidation price action, you will know that, oh, it simply means this and this. As a beginner, you should not trade. By the time you're not seeing proper structure, you're not seeing a proper higher low bullish structure. You're just seeing something like this. You're seeing something like this, and then you just want to force the trade. You want to trade. You just blow your account in how many seconds? You will blow your account. So this candlestick analysis simply help us to be able to see graphically what the market is actually moving, the current sentiment of the market, the current, like what is actually happening, the current and even the past or the historical sentiment of what has happened, and to be able to easily identify some key levels area. So it helps spot traps. Candlesticks can unveil manipulation, can unveil manipulative market behavior like false breakouts or stop hunts, any English you want to give it, stop hunts, turtle soup, whatsoever, giving you an advantage in dynamic markets. Don't stress yourself yet, you are just starting. It's not difficult. This class will be ending in 10 minutes time. So I'll be, what is it called? I'll be dropping the link for the next section down after a few minutes. Would give time for question if there is any question. So foundations for strategy. They are also foundations for strategy. They are the core building blocks of price action, of pure price action and smart money concept. Please don't forget that what we are trying to do here is the strategy we are planning on trading with is simple price action and smart money concept, or ICT, anyone you call it. We are mixing pure price action with what smart money concept together. So personally speaking, I call it the hybrid analysis. So, but however, let's just move forward. Hope I've explained this. So, yeah, they are the core building blocks of pure price action and smart money concept, essential for advanced trading strategy. Essential for what? Advanced trading strategy. Your turn. Now, okay, I guess this is your assignment, and we have just few minutes. I've not explained this on the chat. So kindly screenshot this. This is going to be your assignment. I'll explain it again in the second section. So if you are going to be available, it should be easier. I might just give the solution unconsciously. I don't know, but I'll explain some things in the second section that you guys will be needing for this assignment. So your assignment, apply what you've learned to solidify your understanding. Do you understand? Solidify your understanding and develop your trading eyes. Active practice is a key to mastery. So you will actually need to practice. You actually need to practice. So in the next 7 minutes, our class will be ending. The first thing to do is identify. Let me see. I cannot screenshot this thing because of this person that drew this line on our screen. Hopefully speaking, after this section, you guys give me 5 minutes to quickly screenshot it and send it to the group chat. So at least for those that are not available for tonight's class, they will see the assignment and oh good. So identify long wicks on your demo or your trading view. Just identify a screenshot, then send it to the chat or the group chat, the general group chat. Then find the engulfing patterns. I'll explain that one in the second section. Then share your findings, take screenshot and mark whatsoever. Who was strong here? Is it the buyers or the sellers or the whatsoever? So with the remaining time, we have just less than 7 minutes now. You have less than 7 minutes. Let me see. Okay. This person that drew this thing. Let me see. If I ask if there is any question now, I know there will be several questions because I've not really touched what I'm meant to touch. This is just like the practical and theoretical aspects. Let me see. Let me see what I can touch under 6 minutes. Sorry, can you guys see my screen very well? Well, I should increase it a little bit.
Yes.
You can see my screen very well.
Yes.
All right. Let me make it bigger a little bit.